So I've got an interesting topic for you, one that I would bet every single trader deals with at some point during their trading career, and that is dealing with gut feeling, emotion, meaning that you're seeing something in the markets and you have this sense that something is going to happen. You can't really explain why it is, and you're forced with making the decision, do I act upon it or do I not act upon it? And this topic stems from a conversation I had on Twitter with a trader this week who was really asking this question. He said, Akil, have you ever been in a situation where you're in a trade, it's moving in your favor, and it's getting close to that target level, but you're starting to get that feeling that it's not going to get there? Now, I know you typically move stops to break even to protect any risk on the backside, which is a very smart idea if that's something you don't do already. But do you ever take profits and kind of just take your money and run? And this is an interesting conversation. I'd love to hear what you guys think in the comment section below. Wait till I finish the argument first, then let me know your opinion. But it's interesting because there are two trains of thoughts, right? There are a lot of very successful traders out there. There are a lot of professional traders out there that will tell you, never let profit get away, right? Kind of the older saying is never let a winner turn into a loser. And you can kind of deal with that by moving your stop loss to break even. That way, worst case scenario is you get out for a scratch trade. But many will also say, hey, you don't need every bit of that trade. Take enough, take some, get out and survive to fit the next day. Now, I understand that way of thinking, I understand that logic. However, it's something that I personally disagree with. And if you guys are new to the channel, my philosophy and how I was taught to trade is to be a rules-based trader. Now, that does mean there is some subjectivity, there is some discretion in my trading style. But when it comes to things like entries, when it comes to things like exits, right? How do I get in a trade? How do I get out of trade? It has to be 100% rules-based, meaning it has to meet the rules of my trading plan. If it doesn't, I cannot take action. Now, this is going to sound ridiculous for many of you guys because you're saying, okay, so Akil, if a trade is 1 pip away from a target, you're not going to take your money? You're going to sit there and do nothing? And the answer is yes. And the reason for that is because I'm thinking about the bigger picture, right? No single trade matters. Well, in the bigger scheme, there have been big trades that mattered plenty, but in general, no single trade matters. It's all about the accumulation of your trades over time, your good trades over time. That makes the difference. Again, we want to be consistently profitable traders, not for the short term, but for the long term. And for me, the most important thing is following the process, because I know if I follow the process, I will get the outcome that I want. And the problem with doing stuff like taking profits early, right, is because it's usually not a one-time thing, right? We can tell ourselves, it's just like, I've never cheated on anyone, but I could suppose cheaters say that as well. I'm just going to cheat this one time. And then before you know it, it's another time, and it's another time, it's another time. Or I'm just going to try this drug one time, and then it's another time, and another time, and another time. But it's the same exact thing. We may tell ourselves that, I'm just going to take profit this one time. And then before you know it, we keep going back into the well, and that's going to cause all types of problems. The wife and I have been watching Stranger Things lately. I'm not going to spoil it for anyone, but there's this nemesis, I guess you can say, called Vecna, who's like, he works in the underworld and is trying to, bring the underworld to the real world. And what he's doing is he's not being super deliberate with his actions, but he's making a little crack here, a little crack there, a little crack here. And before you know it, the pressure builds up and then boom, the whole world implodes, right? We deal with the same thing with these psychological errors, right? Oh, I'm going to take profit early one time. Now we're tempted to do it another time. Now we're tempted to do it a third time. And before you know it, it's become a habit that has been or becomes a detriment to our trading. And I actually have a real life example for you. My best friend, right, the guy that got me into Forex trading, he struggled for a very long time. Now, he is a phenomenal trader. He's an excellent stock trader now, but he was pretty bad for a really long time. And it wasn't his systems that were pretty bad. It was him. He had some phenomenal systems that worked amazing, but he was bad because he couldn't deal with the psychological element. And I remember him telling me we're doing a trader evaluation. I was trying to figure out what was wrong with him, and he told me what he was doing. He said, I had this trade and it came within 5 pips of my target profit, and I stuck with it, and then it reversed and stopped me out. So the next trade, when it got within 5 pips of his target profit, what do you think he did? He took profits out, right? Close enough. Then the next trade came 5 pips within the 5 pips of his normal target profit, so 10 pips before. He sat out, market reversed, he caught a loss. So the next trade, what did he do? He took profits off 10 pips early. And he kept repeating this action over and over and over again. And before you know it, a few months later, he was taking target profits off at about 50% of what he should have been doing, right? So when you look at your trading expectancy, right, that is, basically your average win, your average loss, and your win percentage all combined to tell you kind of what you should expect over time, your profit factor in a sense, right? What he was doing was he was taking full losses all the time with his losses, and he was only taking half wins with his wins. And all of a sudden, his wins weren't covering his losses, and he was slowly bleeding his account dry. I did something very similar in my trading career where I had the best win percentage of my life. I was hitting at 70%, but I would end up break even or slightly in the red. Why? Because on those winners, I was winning more, but on those winners, I was getting less from the market. So it's a very bad habit. Now, here's the solution. I hope the trader is listening because this is what he wanted me to expand on. How do you deal with that problem? Well, what we need to do as traders is we need to take that gut feeling or that intuition, depending on where you're at. Typically, if you're a new trader, it's gut feeling because it's all emotional. If you're an experienced trader, it's more intuition because there's something actually there. You just can't put a finger on it. What we need to do is we need to dive into our system, dive into our strategy. And this is why journaling and keeping up to date is so important in trading. It's not just executing your trades and leaving for the long weekend, right? It's about executing your trades and review. And what we need to do is we need to find out what is causing that gut feeling. What is causing us, what are we seeing in the market that is causing us to say, I think this thing isn't going to get to my profit target and it's going to reverse. Once we can identify that, then we can create a rule around it where it's like, I am allowed to take profit if blank, blank, blank happens. Now, when we do take profits early, it's technically not early because it's within our rule set. And then there's none of those psychological cracks because we're not breaking our rules. We're not doing anything outside of what we're supposed to be doing. We've just made a rule adjustment for a specific situation. And then we can remain consistent and get out of trades that have those danger signs, yet stay in trades that have no danger signs and we don't self-sabotage. So that is a great way to deal with it. Obviously, that comes later on in the trading journey, but I know traders of all levels listen to this video. So if you can take one thing, and we are going to get into analysis in a little bit, newer traders, rules-based trading, avoid those gut decisions. You can feel it, you can cry, you can yell, but don't act on it. Newer traders, the next level in your trading after you have a consistently profitable system is now discovering that intuition, which will come, and then learning how to make it rules-based so that you can take your trading to the next level. All right, we're gonna hop into the chart. We're gonna continue this conversation on intuition and whatnot, and how having multiple styles, being a well-rounded trader can help you get into more situations in the market. But before we do me a favor again, comment if you have any opinion on this, whether you're rules-based trading side or whether you're, hey, don't be dumb, take the money and run side. Also, hit that like button and subscribe if you're new. We have a lot that comes out on this channel, from podcasts to live streams to the Weekend Trading Edge video. And all I ask in return is your support by hitting that subscribe button. All right? Oh, also, I don't do this enough, but if you want to learn more about trading, head over to our website, www.tier1trading.com. We got some cool workshops on there. We got some cool content. We got a trial membership for 2 weeks where you can get on the platform, interact with our community, hop in some live sessions, take some courses, all that fun stuff. www.tier1trading.com. That's my shameless plug. Now let's hop into the charts. So not a lot out there in the markets at all. So only one chart we're going to take a look at today, the Australian S&P. But if you guys are new, we are dealing with the dog days of summer. So it's the middle of July. The markets do this. They get really, really slow. Then they give you these weird sporadic movements throughout the week. Every once in a while, then they go back to being slow. But I want to focus on the conversation of thinking about the bigger picture in your trading, because this is something that really changed in my trading career. When I first started trading, I thought that, hey, all I need is one strategy and I will trade that one strategy forever and make millions of dollars. And that can be true, right? No one says you have to take the multiple strategy approach, but the more diverse you are in your trading and your trading style and what you're allowed to trade, the more opportunities you're going to be able to take advantage of. And especially as you get experience in the market and you start developing that intuition, meaning you start looking at charts and you start saying, man, I just know we're going to go down, or man, I just know we're going to go up. But you can't just enter stuff to enter it because it's against your rules. It's going to allow you, it being that diversification, that ability to use different styles and different strategies and different techniques, that's going to allow you to create reasons to get in the trade in the direction that you want to get in without technically breaking your rules, right? We always talk about a trading plan is something that's always being built, and it's kind of like cheating, right? We say that you got to be 100% rules based, but the kicker is this, right? You are the one creating your rules. So technically you can make as many rules, as many outs as you want to achieve what you want to achieve in the market. So let's take the Aussie S&P right here, and let's say we're a trader that wants to get short, right? We don't really know why we want to get short. Maybe we're listening to news. We have this feeling that we should be short, and we're trying to tell ourselves, okay, well, is there a reason, technically speaking, because I need something technical in order to base my trade off of, that I can use to get short? Well, the first thing that we can look at is recent price action, right? Recent price action has been in consolidation, right? You can see we came up, we created new structure highs up here, and then we kind of just went in this sideways channel for about a year, right? This is the daily chart, so recent is going to be a little bit longer than recent on a 5-minute chart. And then what recently happened was we broke out of this channel to the downside. You can see right here in the last few weeks, we had a lower low, lower close. So right there, knowing our rules on how we read a price chart, we know that a lower low, lower close puts us into a short-term rotation. A short-term rotation doesn't necessarily mean that the trend is going to reverse, but it is a sign that we can use if we want to be aggressive in that first move of the trend reversal. And again, we're talking short-term trend here, right? So we can create our bias by using this information that we saw in the price chart. Well, now the next question is, how do I get involved, right? Well, we already had some nice reversal patterns right here, but maybe the risk reward didn't make sense. Maybe we just missed it and we're a little bit late. Well, let's hop down to a lower time frame and see if there's something we can use to get involved here. Again, here's one of those reversal reasons, head and shoulder top right here, late to the party, but maybe there's a secondary opportunity, right? Now, if we look at our pattern or our chart right here, we have what's called an advanced pattern forming. Some people call it harmonic patterns, some people call it Fibonacci patterns. Essentially what it is, it's a series of failed extensions, a series of retracements that typically happen while the market is in consolidation. Bigger picture, it represents the buying and selling habits of institutional traders, right? That's why we see them most of the time in sideways movements or accumulation distribution zones, basically consolidation. But these are very powerful patterns, and they're able to get us in situations that we may not be able to get in otherwise. And this specific pattern is going to be a bat pattern. I'll draw it out. This move right here, this swing high to swing low, is going to be our X to A. This is going to be the starting point of our pattern. This first retracement is going to be our A to B. This failed extension down here is going to be our B to C. And then if the bat completes, it should come up to our 886. And the completion zone for this bearish bat should be between the 886 and the X leg. Now, if we look left, again, this is also a retest of the neckline and the shoulder line of the head and shoulders. And I bet if we were going to take our volume profile out, I bet this would be a high interest zone of volume as well, just based on the consolidation. Yep, so we got a zone right here. You can see consolidation down here being a major zone of interest. And then we kind of go dull, right? Not too much interest in this level. And then once we get up to this consolidation level, boom, more high interest area. So this is a bearish bat pattern. So in normal circumstances, or you would trade it bearishly. Bearishly, is that a word? It's a word today. You would trade it bearishly. But let's say you're someone that gave yourself permission to use bat patterns as entry reasons into bigger trades. Well, this could be an entry reason into that bigger continuation trade that you were looking at or missed on the daily in anticipation of the market moving down here. So again, you have that intuition, you have that gut feeling that something's going to happen in the Aussie, but you don't really know how to take advantage of it. this is a great example of how if you have different options, maybe you missed the pullback trading opportunity, maybe you missed the pattern or the head and shoulders opportunity, but you're a bat pattern trader and you're allowed to trade bat patterns, boom, that is a third opportunity at getting involved in a trade. And I can tell you what, from my personal experiences, right? Good trades don't happen too often, right? A lot of the stuff you see on the charts, again, I went through 30 odd pairs and indices today looking for ideas for this video, and I found a single opportunity that I was interested in. So good trades don't come too often. So the key of trading is having as many opportunities as possible, or giving yourself as many opportunities as possible to enter and get involved when those good trades do come.